G'day, welcome to the Alpha Wave Trader week ahead. Big news over the weekend with the huge upset in the election. I'll be very interested to see how the market trades today as a result. And you'd think, and I'm sure most commentators are saying, that you'd expect the market to rally with the more business-friendly libs getting in, and without the changes to the property market that were potentially going to come through, and to franking credits, etc. So I wouldn't be surprised to see a bounce in those banks and property, and the resources are already strong. So there's a chance that this is enough of a impetus to see the market bust out above these highs. And if we do bust out above these highs around 6,400, you've got to target up to the all-time highs from 07, up around 7,000. So we may be on the verge of a move to test all-time highs, which is pretty interesting after the US-China trade deal going sour and the expectations for Labor to get in. I was feeling pretty confident that this was going to be a precursor to a false break of highs and a return to the range that we've been in for the past few years. But with the Lib win, it's going to be very interesting to see whether there is some real follow-through buying as a result. I mean, the market's already pretty overbought in the short term. So, there is always the risk that we can see very large strength early, maybe in the next few days, and then it fails to follow through. So then you'd have to react once that occurs. But the way it's looking right now, that buying pressure, could be good enough to really see quite a good strong move from here, which is surprising. But as I was saying last week, I needed to wait until we saw a weekly sell pivot before I'd get excited on the short side. And you'll see here, if we just look up close, that was the high we were looking at. And I was saying we needed to see the weekly close below that level. And you can see prices did test below there even last week, but ended up closing quite strong. So there's no weekly sell pivot, and we've got a new high last week as well. And so, on the basis of these pivots, the weekly sell pivot won't occur now until we get a weekly close below last week's range. So that just helps you move along as these trends develop. And you'll see here in that weekly move that occurred since December, as each new high was created, you're creating new levels that need to be broken on the downside before you'll get bearish. And so then that trend can continue to develop. And by waiting for that weekly sell pivot, the trend can go a long way before it turns back down. So that's not a bad hint for you as far as having positions that you're long, and waiting for that weekly sell pivot before you take money off the table. So for example, looking back here with the market, for example, rallying through this period here, we've got weeks and weeks and weeks of rallying, and there's the first weekly sell pivot there. And that's well before this really bad period, which would have definitely shaken you out if you'd only bought in this area. So keeping an eye on the pivots is a very important thing to do, and can really help you to keep positions that you like for a lot longer than you'd usually be able to stick with them, because normal volatility always manages to scare you at some point, and make you think you've got to get out. But waiting until that weekly pivot can be a great idea, because who knows? This trend could have kept going for a long way, and that's waiting for real signs that levels have been broken is what you really should be doing if you're tracking positions. So where we are now, it's a very interesting situation, being so well overbought, and I'd just always be expecting the market to have a false break before even heading higher. Just always the way with the market that it will look like breakouts and will tempt people into positions, and then will shake them out. And even if it is heading a lot higher, often that shakeout will be enough to scare enough people out of their positions, and often that will be back to the midpoint of the previous wave. So that's just and that can still happen from here. Maybe we do see this big strong move, but then that fails on the back of US weakness with the US-China trade spat unraveling. So it's a very tricky sort of time, and my own positioning for members is long in a bunch of stocks, smaller mid-cap positions, but with a solid breakout above this level and heading towards all-time highs, maybe you need to really step up and get long this market. So it's a interesting time with the libs getting in, and I'll be watching today's price action closely to see whether there is really follow-through buying and the market is ready to break out and create new highs. The US market, on the other hand, is in a very different situation, which is, I guess, what makes this situation so interesting, because we have seen the weekly sell pivot in the US. You can see here on this weekly chart showing you the last year or two's trading that we have recently created a new all-time high. And then we've got the weekly sell pivot there, so the close below the low of that highest candle. So there is potential that this market could be turning back down. And until I see a close above the high of that weekly sell pivot candle, so I'd actually need to see a close above the high of that level, I'm going to remain on a bearish footing with the US market. And the way I look at it, and this is where I can't give you too many hints about this, because as I've said before, it's all about what happens after that weekly sell pivot in place is where you can create great trades. But it's pretty usual price action for it to go and test the upside, looking like it's going to break out and going to take off again, really shake people out who tried to get short on this little leg down here. So it's just pretty normal for the market with all of this upside momentum still to still see buying pressure. But until we see that weekly buy pivot, I'm looking for opportunities. And one little hint would be going into the daily chart and having a look at the pivots from that point of view. And so let's just have a quick little look at the daily chart. If we look at this daily chart of that same thing, which is the E-mini S&P 500, you'll see that we had a daily sell pivot there. There's the close below the low of the highest price candle there. Then we've sold off to support, and we've got a daily buy pivot there. So the most recent pivot on the daily is actually a buy pivot, saying that we can be seeing further upside in prices. Now, if prices do rally a little bit more, and then we see a second daily sell pivot, So we see a high in prices, and then we see a close below the low of the highest price candle. That second sell pivot is the interesting one, because that's giving you that sense of prices selling off. And often it's not the first one that gives you the best opportunity, because that's where there's a high risk that prices could just be turning straight back up. But it's often the second pivot to the downside that is where you can get your best opportunities, and where it seems like the big boys start to step in. So signs are that there's weakness around, with that sell-off going below that third Bollinger Band, the highest level of the third Bollinger Band, and I can tell you about that another time. But that's the hint that things are turning down. And so the opportunities are often in the area 1 to 2 standard deviations above that 20 period moving average. So from here, still looking at further weakness. We need to see prices moving above that all-time high to really change your view. And the opportunity will be following this current rally and getting in once prices prove that they're turning back down. And in that situation, the next leg down could be a real doozy. And the way I look at it is looking at this whole wave. I'd just be expecting to see a move back towards the midpoint, which is around 26.50. So that would be how I'd look at this. So that's enough for today. I'll come back with more next week.